One of the biggest challenges for the saver has been to keep the value of their cash. Over a long period of time, it continues to buy less and less. This is the hidden hand of inflation at work, a central bank induced construct there to wipe away the debt and force savers to become speculators. Throughout cycles, however, there are major changes to the monetary system, and perhaps we're headed towards one right now. You came here for the truth, so let me unveil that for you. Today we're going to talk about central bank digital currencies. I'm not talking about Bitcoin. I use that in the image, of course, just to point out what we are looking at today is so different than what we had, let's say, even 5 years ago. The talk of a central bank digital currency simply wasn't there, but now it's becoming more mainstream. Now you're seeing all the central banks talking about it or implementing it in certain cases. You are seeing the financial organizations that are buying it, that are putting some cash into it to some degree. You've got funds being set up. There are ETFs being set up. And this is really, really getting into the minds of the average individual and wondering, what is this all about? Well, we're going to talk about that. I want to look at what has been happening, give you some insight here. There's a lot to cover. Let's go. But no video would be complete without an update on the Fed Reserve balance sheet. Yes, that's right. Guess what? They increased the balance sheet yet again, almost near $7.8 trillion. This is what the central banks do. They like to devalue the currency. They do so by pumping up their balance sheet, by keeping interest rates low. And we could see that this trend clearly is going to continue for the foreseeable future. Wall Street banks brace for digital dollars as the next big disruptive force. Okay, looking at countries as large as China and as small as the Bahamas have instituted these digital currencies. Right at this moment here, they're still in their infancy. They are simply just a beta test, but I do believe they're going in this direction. In the US, the Federal Reserve is taking a cautious approach, though it has launched a project with MIT. And I wanted to point out here that at this point, the US, considering its position, it's the dominant currency, it's overwhelmingly the reserve currency of the world, they have the option to step back and say, okay, you guys do the testing. You guys see how countries respond to it, and we'll simply wait around. We're going to do a little bit of this and that in the laboratory, but we're not necessarily going to go towards that at this moment. I do believe what they have to offer, the central bank digital currency, is more about control. It's not about security and safety. Look, the Federal Reserve is in on it, and you've got the SWIFT system from the US government that basically, I like to think of it like highways on roads, and they control all the highways and roads. And simply put, they're not going to give that up. They're not going to allow this to go to some decentralized, completely, decentralized platforms. This is about more control. They want checkpoints on those highways and roads more so than they even have today. And you know how restrictive it can be. If one country is on the naughty list, they could simply shut down those roads and highways. But that's something that at this point, they have no reason to move forward in this aspect. New forms of digital money could provide a parallel boost to the vital lifelines that remittances provide to the poor and to the developing economies. The biggest beneficiaries would be the vulnerable people sending small value remittances, those most at risk being left behind. Potential losers from the digital currencies include some financial institutions, both in traditional banking and in fintech, that could lose deposits due to people putting their money into central bank accounts. And I think right here, what they're pointing out is interesting because as they go towards negative interest rates, the banks are simply in a position where they have to charge their customers these negative interest rates because that's what's coming on them from the central banks. So I think it's moving into a completely different environment today where I'm not saying they don't want your deposits, but they're not doing much to get people's deposits right now, even though there is a surge in the amount being kept at the banks today. It seems like, they're not really making what they could before. Things have really changed. Digital money 2.0. As the Fed and other central banks work through the logistical issues, Wall Street is in growing anticipation over what the future will hold. The race towards digital money 2.0 is on, according to this report by Citi. Some have framed it as a new space race or digital currency Cold War. Right now, in the short term, over the past few trading days, you could see what has happened to let's call them the proxies of Bitcoin. And that is, of course, MicroStrategy and Square and Tesla and PayPal, companies that have purchased some of the Bitcoin. And you could see, especially with MicroStrategy, falling what looks like 25% over this period here. And that just brings it down. I mean, you look at it on a longer chart. This is over the past, 4 trading days. But if you see it, what has happened over the last several months, it has really been booming, along with many other stocks as well. But the tech industry has seen, sort of a plateau for many of these companies. And like Amazon, for instance, which has been sort of, moving through this pattern for a little while. So I'm interested to see how this goes and if more of these companies start to accept Bitcoin, start to accept cryptocurrencies, and how that really impacts the central bank digital currencies. Do they accelerate their plans because they don't want more money moving into those? I think that could be part of it. And then you have Dogecoin. A cryptocurrency that was created as a joke exploded into plain view on Wall Street on Monday, with a surge in Dogecoin sending its 2021 return above 8,100%. More than 8,100%, more than double the gains on the S&P, including dividends, since 1988. And that happened in this short period of time. I mean, nobody's going to put all of their assets, you've got several $1 million, and that's what you've got today. And you think, what, I'm going to put all my money in Dogecoin. Maybe some would, but these are not for the big institutions. These are not for the big investors. But this has now become one of the top 5 cryptocurrencies. Some, over $40 billion is now in this. So it's not necessarily a small thing anymore. But the underlying point here is that this started as a joke. And then we have the comments directly from the People's Bank of China. After a Bitcoin crackdown, China now calls it an investment alternative in a significant shift in tone. The deputy governor called Bitcoin an investment alternative. Industry insiders called the comments progressive and said that they were significant. If you remember, 2017, China cracked down on cryptocurrency trading and so-called ICOs. So it wasn't as if they were telling you. I want to make this very clear because I posted about this on my Patreon and Twitter and a post on YouTube. Basically, what I suggested here and what they actually mention is simply that they're not saying Bitcoin is fantastic, you should invest in it. They're not saying it's good or it's bad or anything like that. All they're doing is changing the tone somewhat. I don't think it's necessarily a significant shift, but the way that they pointed it here, and this is coming directly from the PBOC, it's not just some analyst at a bank or anything, is that they're saying it's an investment alternative, which I think is showing you what's to come, that these digital currencies, whether it's Bitcoin or central bank digital currencies and so on, I think at this point it's here to stay. And now for the Money GPS insight. A lot of people have been talking about Bitcoin, talking about Ethereum, looking at all the cryptocurrencies, and what have they suggested? Well, some are very, very bullish on this, suggesting that the prices will never go down. You've got others saying that the prices will absolutely go to zero. And I think as an investor, you have to weigh out the risks and the rewards. You got to look at certain companies today and what their activities are and realize there are risks in just about everything. So, as an investor, you have to think to yourself, where is my money right now? Where am I going to see, with certain activities happening today, inflation or deflation, and the potential for confiscation of certain things, and maybe crackdowns on other things, and the ability to move money from one place to another. How are you going to do that? How are you going to make that happen? Just like some people would say cash is trash, do you think it's wise to have some cash just in case as an emergency? No, you're not going to keep all your savings in cash, but isn't it a useful tool? Some see that having Bitcoin, having other cryptocurrencies, being able to use it simply in an emergency case, some type of emergencies that is. So looking at all these things under a different light helps you to get that different perspective and not necessarily suggesting what the price will be in a year from now, 10 years from now, and so on. So I think there's so much more to it than that in the topic, and that's what I'm trying to point out here. The central banks are doing one very, very dominant thing overall, and that is to devalue the currencies at the same time that we are seeing all of the supply chain issues, all of the problems, and these two are compounding, creating this massive, massive disruption in the average person's wallet. Look at lumber being one of those. Not one down day since March 26th. This is unbelievable. If anybody has been doing any renovations, I've been hearing it from so many people. But I've asked the audience before, talking about lumber and how much they paid, let's say 1 year ago versus today, or 2 years ago versus today. Screws, any material, any building materials whatsoever, everything has increased. Commodities have increased. Look at palladium. And another point that I want to make here, this is it looks like, at a record high. Many people say precious metals are dead. Precious metals perform so poorly. But remember, palladium is a precious metal. And I want to show you this over the last 5 years. So this is not what has happened over the last 16 trading days. This is not what has happened since March 2020. Look at it over the last 5 years. And although the performance can vary just like anything else, you could see it was, if I bring this all the way back, it was, around 600 or so. It's hard to tell on here. 600, now sitting at approximately 2,800. So that has been performing very well over this period. If you were diversified in precious metals, you would have gold, silver, but you would also have platinum. You would also have palladium. And I think it's important to look at all of them. In fact, just seeing this right now, you have to remember to always keep those in. I think I might have said actually platinum, but I meant palladium. The point here is that looking at the different metals, seeing them as a whole and diversifying within them. Really quickly, let's move through these. Goldman Sachs U.S. Financial Conditions Index. It's very clear. It has been continuously getting easier. And of course, everybody loves that. You can see the change in margin debt from a year ago skyrocketing, absolutely skyrocketing today. No surprise there. The risks are on. And that is when you get something like an Archegos happening. And you can see right here, margin debt going off the charts. We've never seen anything like this before, but don't worry because they're looking into it. It looks like LA is set to become the largest city to offer guaranteed income for the poor. Pilot program would offer $1,000 a month to families. We need to see what happens with this, of course, because it's going to expand. We're going to see the whole MMT. We're going to see a lot of money being given in certain areas. That's going to expand, and that's going to expand and expand. And you will see the debt and the deficits going higher as a result. Whether you think it's a good thing or a bad thing, whatever, I just look at the economic aspect, and clearly we know where the direction is heading for the governments, not just in the United States, but all around the world. Last point I want to leave you with this. This article was literally written specifically in order to get you to buy more stocks. But what they did point out in here, and it's just suggesting, we don't know what's going to come. Is it going to go down? Is it going to go up and so on? Watch the VIX and keep adding hedges. When it comes to fears about the broader correction, the truth is that the corrections have already happened. And then it goes to point out the fact that the market for many stocks has really not been so kind. As of late, we've seen 10% declines and even further. But this is the point that I wanted to make right here, is that you've got to add those hedges. If you are seeing your income going up, your portfolio rising, there are certain things that you should be doing that are always, no matter the current status of the market, always wise. And there is going to be a time in which you think back and realize that that was a smart idea, to always hedge your bets. That's all for this video. If you found that informative, hit that thumbs up button. When you do, you're supporting me. I want to thank you for that. If you want to learn about e-commerce, you want to sell stuff online and make money, you can do so for free at the AmazonGPS.com. If you want to know about the financial system from top to bottom and you want to learn in a very, very easy manner, you can do so in my 2 books. Check the link out in the description. Hey, have you seen this video yet? No? Why not? Check it out. It's right there. Click it and I'll see you there.